Welcome to Trading Lounge, the Australian report for Thursday, July the 29th, starting on the daily chart here. So from this wave 4 here, we're looking up to wave 5 of 5 of 3, and we're looking for 5 waves in this particular move here. And yeah, we've got wave 1 in play there, as you can see, and it's starting to sort of curl over, so to speak. So we've got wave 1 in play, and we're looking back for wave 2, which really fits in quite nicely with Thursday normally being a bearish day in a bullish market, in line with the bullish weekly cycle that we have. So let's just cruise in and check out the intraday, pick it up from this wave 4. So that's it in a bit of a nutshell. We're looking at this wave 3 can actually go here as well. Not that it's a big deal at this point, but yeah, so it's just there's a little wave 1 and 2 in here and 5 waves in here. Anyway, long story. Yeah, as you can see, it's rolled over. It's sitting on this trend line quite nicely. That's why I left it in. And it hasn't pulled back to its box. Doesn't have to. It can do. It could just come right back to exactly the 61.8% and blow people's minds, or it may do nothing of that and just move higher. So we need a bit of a strategy for that. So let's cruise in and have a closer look at this. So this is the strategy that we've been employing here, in that we want to buy new highs, really. That's all we need to do. This move down through here, it could be counted in different ways. It could even be counted that it's actually finished here with this wave 2 here. So we just need to be a little bit careful, but what we can do now is bring this down to the top of this one here. It does appear that this little move here is impulsive. So that could lead to a push further to the upside. We don't need 2 of them there. But the idea too, let's just say that this gets triggered in here. So between, well, let's just go further into the, don't need to go to a 15-minute chart. We'll just go to the tick chart and we'll talk about this a little bit more here. So let's just get this into perspective. So we've got wave 1 sitting at the top there. So the thing is that with a wave 2, if I can put a wave 2 in here somewhere, then probably already one there somewhere, but still. Okay, so normally with a correction of wave 2, right, from wave 1 to wave 2 of any degree and size, we look for a simple zigzag, that's a zigzag pattern. And in fact, this leg here is in 5 waves, 3 waves and 5 waves. That makes the A, the B and the C, and it should be really quite simple. It's simple and sharp. So as far as I can see, the only way I can get this zigzag pattern here is looking at this as the A wave here, then an A and a B and a C wave here for the B wave and down for the C wave, and we're finished here. That would match that. The other way that we could do this, a bit of a long way around, is if I just copy this again and pop it over here, and this would be the A wave here, then an A wave here, an A, B and a C wave here for the B wave, and then up for the C wave to make the B wave here, and then down for the C wave. So that's a little bit complicated. So the answer is I don't know what's going to happen here next. But I do know that we should be buying new highs. We could even bring it down to this level on top of this move here for this. So according to the situation, we should be coming down here on Thursday and then moving up from that point. Taking this trade here, you could get trapped, so do not overtrade because you may need to hold it back. You may need to hold it most of Thursday, because we'll be looking for Friday and Monday to be bullish. So we'll see how it goes. Obviously, from this low to this high here, if the, well, that's right, sitting right on the 61.8%. So if that moves down below the 76, but it shouldn't do that, should it? So, but still, we're facing the opening as well, and with the opening, you've got the people at, I'm talking about the futures market now, the SPY futures. It's a bit like a poker table. There'll be a few big plays in there, gripping it to get control of. There's people that use it to hedge, like Macquarie Bank. They'll just use it for the hedging side, but there'll be, I haven't seen it for age. There'll be smaller players in there that grapple for control. They might push it with 200 contracts this way and that way just to test it, to see if anybody's biting at that side of the market, and so on and so on. So it's a shame that, like in the old days, the retailers, we could see which broker was buying because each broker had a number, So we could see that if, say, Morgans were coming in with 150 on this side, and then they come in with another 150, you could see them testing, but all that's been taken away from the retail trader. The ASX people that run it are like an old boys' school, and it's really disgusting. So, it's just almost backwards in a way. But that's another debate. Anyway, this is where it stands. I don't know where wave 2 is, if we're going to be coming further down here for wave 2 today, or we're just going to, cruise straight up here because the correction kind of satisfies its needs. It just hasn't really retraced much. Not that it has to, but just really needs to create the pattern, which it's done. So let's just see which way the wind blows. But just be mindful about Thursday. Thursday, it could get you trapped here too. So Thursday can open higher and then trade down for the day. And if we're trading down here for the day, we're looking for 5 waves. And so down into the 73 area, maybe the 73.30, and then moving up from that point. Okay, with this market here, let's just go back to, say, the 4-hour chart here, because we know that the finance sector has got a lot to do with this during the day here. So with the finance sector, we're using CBA. So let's just check on CBA. This is the daily chart for CBA. That top there was the 17th of June. So moving that out the way, 17th of June. Where are we here? That's the 17th of June here. So that wave 3 high is the 17th of June. And so is this one here for that. And then this low down here is the 20th of July. So that's a whole month there. So where's that one there? That's pretty much on July as well. So this is a 4-hour chart, and the chart that we're looking at here is a daily chart. So we can say that this market turned here, and we've been waiting for it to finish here. So we're expecting this to be basically wave 1 and wave 2 up here, and it's going to flutter around a little bit. Our aim in terms of trading was to get a position under the $100 and then above the $100. We also understand when a market's moving to the upside here, you'd have the arrival, the reaction, the first high above the level, some type of ABC correction, and then moving. That's basically what's happening here for this. Okay, so there's going to be Thursday could easily be the bear day, but then we'll be looking for Friday to move. So this could pull back further. So keep your stop under these current lows here until we've got the 100 as support. Then we can bring stops up from that point. So hopefully this is right. And once again, same as the ASX, we're looking for 5 waves up, wherever that takes us. And that will give us wave 5 of 3, and then we'll slip into a bigger correction. And that will be in line with the rest of the world, well, the US world anyway. So that's where we are with this. So if you're long here, just hang in there a little bit until we get above the 100. ANZ that we also look at as well. I think that wasn't on the 17th. Oh, it was 16th, 17th of June too. So 18th, there we go, 17th. So Same story here as well. If you want to go long here, then look, a break above the 28 would do the job, but keep the stop below here. This is also wave 1 and 2 coming into play here for this market. So I think we talked about being long here already, but we can go long with a clean break above that, and that should take us above the level. Take us up to 32 there. Not a long trend, but yeah, somewhere to park some cash at the bank. Better than putting it in the bank, betting on the banks. So what's that? Just want this one. We don't want that one. We don't need that. Don't need these. See some sort of long trend line there. So we'll just pop these here for the time being. Sorry to do housework on your time, but it's the way the cookie crumbles. Over to the resources. Where's iron ore? There we go. Okay, so we can see by the stochastics that we are I can bring this up here a little bit. On the date, we're on the daily chart. We can see the stochastics are down here, getting loaded, ready to pop. It popped here. There's so just your normal settings, you know. So yeah, we can also expect a bounce off 1000. Now, what I do need to say about this is that what I have been saying, because we've got 3 waves down here, it's possible just to have wave C come back to wave A here and be finished and move up. That would be a flat correction, and that's okay because we've got 3 waves here. That's very clear. It's not 5 waves. If we had 5 waves here and then we're retracing back to the 61.8%, then we would come down lower. So I think there's a really good chance that we're just coming down to this point here, and then we're going to be moving up there. Now, going from wave B to wave C here, we're looking for 5 waves. So let's just go in. Is it on the tick chart? Okay, so let's just bring this in a bit. So this is our B wave up here coming down for a C wave. I should have them in blue, but you know. So we got 1, 2, 3, 4, 5 for wave 1, and then 2 there, nice strong third wave, fourth wave, and 1 and 2 and 3 and 4 and 5. So we're still looking for one more low here. So we'll just see how that plays out. That looks like the ABC here is an A wave, a B wave, and a C wave. And so we haven't landed here yet. But the other point to this is that we need to be a bit careful. So I think that we'll have wave C here. That really these need to be in blue, the next degree higher. So, but we can have the low in place here. And if we don't have the low in place here, then all of this is just wave 1 here, going back for wave 2 here, and then going down for wave 3. So what we'll need to do is when we get the bounce off here, it's going to be good for iron ore stocks anyway, and I see them going higher, so it's not a problem. I think that we'll be just going straight high, but we'll have to be mindful that we'd get this wave 2 here. So because if this is all wave 1 here, we could get an A wave, a B wave, and a C wave for wave 2, and then go down into wave 3. Now, I don't think that's the case. I won't even put the wave 3 there. I just don't think that's the case. I think that we're just going to be here, and we'll head up from there. But as always, we need to. The truth is the evidence, and I don't have any evidence, so I've got no truth. So we need to wait. Okay, but my feeling is that because let's just cruise back for a moment, see if we can squash all this in on the tick chart. Okay, didn't freak out, so that's good. So don't need these here. Oh, don't really, but just what I want to point out here, this first move coming down through here is very clearly in 3 waves. So we've got 5 little waves here for wave A, and then a B, and then 1 and 2 and 3 and 4 and 5. It's a beautiful pattern. It doesn't get any better than that. But point being is that's in 3 waves and not 5 waves. Okay, so yeah, and then all of this ugliness here is the B wave, of course, and then the C wave here. So it can finish here, but yeah, we just need to be a little bit careful. Anyway, that's all I really wanted to say. I just need to keep going back over this because there's new folks coming in and all that sort of stuff all the time. So yeah, let me put this back to daily. So it's possible that you know, if you're thinking about iron ore stocks, then get ready. You know, we may only get a bounce to the 50-60% retracement level, which is 1,100. We're going to react from there anyway, so don't panic early. We need to see if we get 3 waves up or 5 waves up to the 100, and that will help us at that point. But in terms of iron ore stocks, yeah, start. You know, we've all got our own setups and ways of moving into markets. I'm just saying we're going to get a bounce off the 1,000, so that's going to give the iron ore stocks a bit of a movement too. So I'm going to go through the what's the names together. The commodities. Okay, so not much happening with gold at this stage. It's still possible to have a move down here based on the move that this move up here was, this little move was corrective. So it's possible to break that low and have another move down here. It was also possible that I looked at yesterday talking as well, is this move down here was actually in 5 waves. So it didn't really, so it's possible that that could be the end, but then we've still made a new low here. So yeah, look, this is really messy here, so I need to ponder it, and I haven't had the time to ponder it, but I've just made people aware that we could come down to 1780, and also tested support on top of 1810 would also trigger a long trade as well. But the thing is, it won't give you a nice classic trading levels pattern. It will just probably pop straight through. If it was going to, it would just be up for 1 here, back to 2, and then it'll just pop straight through that because it's got this accumulation base here that can send it straight through. It doesn't really need to climb. It's already geared, already the springs loaded, so it can just pop up. So just be a little bit mindful of that. We can, of course, bring that down to here on that scale here. I've talked about getting a classic trading levels pattern on the 1810, but because of this extra move here, it may just pop and not really sort of spend any time there. You know, it might be something just like this here, give you a pattern here, but you know, Jack will be nimble, Jack will be quick. So that's gold. Just having a look at the commodities, crude here. So with crude here, the move down here is in 3 waves, okay, but for me to put this wave 4 there, which I don't even think it is a wave 4 here, you know, but I'll stay with this for the time being. But as a wave 4, the 38.2% retracement level is probably down at 6,000 here. So this is really the wave 4 of 1 less degree, and here. So this is in 3 waves here. So technically, it can just move straight up from here. The thing is here is that we'll sort of keep that in mind, that it needs to pull there. That move up there is already in 5 waves, so we're looking for a sort of a correction here that we're not getting. Well, we are, but it's very small, and then the next little sequence is starting to the upside. So it could end up something like this, and then moving up. That's the problem that we're facing at the moment. So I don't quite know what the situation here is for this. It's quite possible, as I mentioned, this can just move straight up. This move here has 5 waves in it. So if we go to the tick chart, it's very clear that we've got an A wave, a B wave, and a C wave over here. Not a problem. It can be the A wave or wave 4 sitting here. And then coming up here, we've got 1 and 2, then 1 and 2 and 3 and 4 and 5 here for third wave, fourth wave, 1, 2, 3, 4, 5. So we've got a nice impulse wave over here. So that tells me that after a correction that we didn't really get, you know, we should be looking, I was waiting for my B wave or wave 2 to come in play, but we've only got this small move here. and then it's just starting to, you know, nip the top out here. So that's 5 waves. That's a little bit dodgy there. I suppose the best effort that I could probably do is here, which I'm not that happy with at that point either. I mean, technically it probably should go here, but that looks like 5 waves. So that means that that would be an A wave, an A, B, C, D, E here. And okay, I got it. So that's it there. So now we're going to go 5 waves up. So I'll just copy this. That's 5 waves up. That's 2 waves back. So we still need wave 3. So that will be there. 4. I'm squashing all this up because I'm still going to kind of consider the B wave in play here. So the A wave, the B wave, and the C wave here for wave B. It doesn't look like a B. That looks like a B. Yeah, so that's it, I guess. That's where we are. I need that. And I don't even know if we'll come down here, you know. But what I can do is that if that's the length of wave 1, well then wave 3 will be here, wave 4 will be here, and wave 5 will be here. So between 74 and 75, that's where it could end. So I have to wait for this 5 waves here, and then if it's going to be bullish, there's going to be an ABC, and then it's going to go further up, or it's going to come down at that point. So for us to go long on this, it will be here, or you can go long here. That's it. So moving on, I want to have a look at copper. Copper's a little bit of a tricky one as well. So I know that from, this is a 4-hour chart, we can look at this as being wave 3 up here. That's not a problem. And then an ABC here. So it's possible to put wave 4 here because it's pulled, that is the 38.2% retracement level. But it made it a little bit difficult for me when I looked at this here, because if this was going to be wave 4, then we wanted to see wave 1 and 2 here. But I could force that to be wave 1 and 2, but it sits better as a corrective pattern. So if it is corrective, then this move up here is going to be corrective as well. It's up at the 50-60% retracement level. So the only way I can turn bullish here is if we get a classic trading levels pattern sitting here. That's the bottom line. And we'll be long over here. I think that this makes me think that all of this is just the A wave, the B wave, and the C wave down here. But if this is in line with the Australian dollar, then we're calling a low in there. We should just check on the US dollar as well. Let's do that now. So I've just brought this up. It's on the daily chart. Let's just go to the, well, basically while we're here, we're looking, it's the reverse of the Australian dollar and reverse of the copper market. So an A and a B and a C wave here, finishing here for a wave 4. And then on the 4-hour chart, let's just check in. So it's come down even further. So basically the A wave, the B wave, and the C wave here for that wave 4. We've got wave 3 over here, so an A, B, C for wave 4. So it's looking good. We wanted to see a bit of an impulse wave down here, or we can see 92 as the resistance, but it certainly looks like we're sort of on our way here at the moment. So that's actually even moved further down. So that means let's just check on the Australian dollar. Hasn't triggered in yet, so we'll just go back on our 4-hour chart here. So just over here, we've got wave 3 here. We know that this move here, the same as in the DXY, is corrective, and the same in copper as well. We know this first leg is corrective. So we know that copper, US dollar, and Australian dollar, and take that through to other places, currencies, and so on, it's the same. So we've got an A and a B and a C. So we know that all of this is corrective. We've been counting from B down to C here in 5 waves in green, 1 and 2. And then 1, 2, 3, 4, 5 for this green one. And then wave 4's gotten a little bit weird here, so we can look at it as an A wave, a B wave, and a C wave to here, and then 5 waves down finishing here. If this is wrong, then what we need to do here, and of course we can be wrong, is that all of this, that means that if it was wrong, wave 4 would go back up here, and then all of this would be wave 5 coming down here for that. So in that case, we'll look at this as 1 and 2 and 3 and 4. And in doing that, we can look at wave 4 from this top here roughly down to that low. That's the 38.2%. So it's there. We wouldn't want to see the market go any higher than that. So if the market took out these tops here and moved up through there, then it's moving up past the 50% at that point. So then that wouldn't be the wave 4 at that point. So it puts a little bit more weight on this being in here and this being over here, and then this being wave 1 here, and we can still put wave 2 over here for that. So it could still be a wave 4, we could still come down. So that's what we just need to be careful of here. If we were going to come down and that's going to be a wave 4, well then what we should really do is just do a little bit more work on this. I'm just going to go to the 20 tick chart just to pick up this here. Let's just, that should be good enough actually. That's good. Yeah, that should, I mean, from this low here, it looks like 1 and 2 and 3 and 4 and 5 here, a bit of an overlap here. So that's probably 1 and 2, but just this 5 waves here sort of, that's corrective here. Well, yeah, I mean, I can see you can get 5 waves out of it, but it's got overlapping wave structures. Just want to have a little look back in here a bit just to okay, got it. This is, we don't have 5 waves up on this leg just here yet. That's what I was trying to find here. So we can look at this here as 1, 2, 3, 4, 5 here. I'm just stretching it out as 1 and 2 here, and all of that is the 3rd wave. All of this is the 4th wave. There's some sort of A, B, and C here for that. So we're still looking for this move here to come up. So that's going to come up. I mean, what I'm sort of thinking here is that if I could just take you back a second or two, go back to our 4-hour chart. I'm just trying to sort of look at of this being a wave 4 here. So wave 1 and 2 and 3. And then all of this being 4 here, and then the wave 4 being sideways and complicated as an A wave, a B wave, and a C wave up here. So it's what I'm sort of thinking about is that we could get trapped here. So we could get wave C, just poke up a little bit here, finish off in 5 waves here, and then come down for that and get trapped there. So what I was trying to do was trying to understand this little 5 wave move here, and what we'd do is catch it on the rebound. So it comes up, and then that would all be wave, that's either going to be wave C as an A, B, C for wave 4, or it's going to be the next wave 1 to the upside. So it would be, we'd still need to see this here. So I'm thinking that this little move up here being 5 waves, we'll wait for the pullback there just in case that drops back down here, and if it pushes up from that side, then we'll be on it from that point. Because that is a wave 2 there, it's just a little bit sort of big and it's sort of haunting me a little bit. So this little move in here, let's just go back to that again just quickly. Yeah, so this being the A, the B, and the C wave up here, that will take us just bring in a bit more. Just want to make sure I got that top there. Okay, so we'll just take that up a little bit. I mean, that's going to be important, but it's these guys here, so that number there. So that brings us into 74 here. So, okay, so if you want a safe trade, then it's the 74 here with a classic trading levels pattern. And you go long above that one there. And then that will give us time for this move up here to be, this move here has got to be all of wave 1 at that point. Do you know what I mean? Or it's going to be wave C. So this top here is either going to be wave 4 or wave 1. And by having a classic trading levels pattern here, it's going to be very helpful, because that first high above the level is your reference point, because that can go there and come back at that point. And also too, this 5 waves moving up here will come back 50–60% anyway, so don't go bearish too quickly. Do you know what I mean? So it's all about this number here. That's one we'll use. We're looking for a classic trading levels pattern on 74, and that will keep us safe at that point. Sorry to take so long on that, but the details can be important. So that pretty much covers the commodities. And now we want to have a look at the stocks. So I want to have a look at US BHP. So that's over here. I need to drag that over here. And it was up over 1%. So that's healthy. We've got increasing volume. So yeah, look, 80 is not going to be a problem like it was over here, because the wind's been taken out of the sail, so to speak. But we will see consolidation and vibration across here, below the level, above the level, below the level, above the level. We're going to be seeing something here. I've got this here sitting as an A wave, a B wave, and a C wave here, which I'll need to check as 1 and 2 and 3 and 4 and 5. Probably not the case. But otherwise, I'll call this in over here as wave 1. I could even put the triangle in here as well, I guess, in terms of D here and E here for that triangle pattern. I still haven't had time to ponder that, which I need to write that down now in my little book, so when I'm sitting down quietly I can mull these over. But the point being is double tops are never the end of the bull campaign. Words from W.D. Gann. So, and he also mentioned too that normally if it doesn't go through here this time and comes back down, it will be the 4th time it goes through. So when you see triple tops, it will be the 4th time. So even if this doesn't pan out here, we'll be more diligent on the next time coming through here as well. But what we're looking for in the bigger picture here is we're looking for this number here, major trading level 8 here, number 80 as the support, and it's all going well here, so we're still trending higher. This trend in here is a little bit tricky to see. We'll probably have to call this wave 1 and 2 here at the end of the day. On Fortescue metals, it's got a nicer pattern through here. So if I just jump straight over to Fortescue here, you'll see that after this move here, we've just moved straight up through here, which is it's the same pattern. So I'm looking at it, yeah, I'm being a little bit philosophical about the pattern here for the pattern here for BHP. It's all squashed up, but it's starting to stretch out now. And BHP on the local front. So as I mentioned yesterday with this, is that it's all going very well. We can move the stop up. I'll just leave it there for the time being. Oh no, we can bring it up to here. So the thing here is the next important step here is the 53 to become the support, because once we get 53 as support, as a tested support, if it can, then the market is finished with this number here. The number 3 here, the 53, the 3, that severs any pull from this 50 at that point. And folks will start looking at 55 at that point. So we need that as support. So it's sort of all eyes on this. If the 52, the pivot within group 1, 2 and 3 here as minor group 1, if the number 2 here becomes the resistance, then it's likely to be pulled down to the 50 at that point. So they're the numbers that we want. We don't want 52 to become the resistance. We want 53 to become the support. But becoming the support takes a few wiggles and squiggles, as you know, classic trading levels pattern sitting there. So we'll give that some time. No rush there for that. We also need to look at, we've been looking at Rio, so we'll just have a quick look at Rio. I definitely need to go back over and have a look at Rio's count because because we're breaking into new highs here. So I've got to go back and have a look at, because when I do my counts in the bigger picture, I always go to the most conservative count first. And then once that's blown out of the water, like this is being blown out, taking that top out there, confirms that this is not wave 5 here, that we're going to need to go into a bigger picture. So I need to do that. I've known that for some time and I've talked about it a little bit. I just haven't had the time to look at that properly. But yeah, I mean, all of this here can be wave 1 here and back for wave 2 and then wave 1 and 2. And all of this move in here is a little bit tricky to figure out. But when you look at FMG, you can start to figure it out a little bit more. But I will spend some time on these and resolve and so we can move forward on these. But the point here being is that this is major level 1, and then we've got 1, 2, and 3, which is minor group 1 again. And we need this as support, because as soon as we get this as support, then the market's not going to be pulled to the closest largest number. It's going to be pulled up to 5, the next number. And because, I mean, I really like this. If you want a long trade, this is the one to take, because we know that the iron ore is going to bounce off 1,000. And all of this in through here is the accumulation period here, really. So we have no problems in getting to 150 here. So a nice, easy money. We'll have to play that song over it, easy money. Okay, so that's those guys. We looked at some main stocks. We haven't looked at Newcrest Mining for a while. Like I said, with Newcrest Mining, we may end up making a new low below this one here. That wouldn't surprise me. I could get 5 waves out of this little move here, but I'd be forcing it. So I'll just wait for this. I've got skin in the game here as well. We'll just leave that. We're just still toying with gold, as you know. There's no sort of moves on that just yet. What else do I normally look at here? I think that's pretty much it in a nutshell. So I'll leave it at that. Okay, but just to sort of recap, I mean, Thursday is normally the bearish day. So just be a little bit careful about Thursday. It can open high and then trade lower for the day. So be careful about getting sucked into that. And then late Thursday afternoon, it should start tightening up. And then Friday to be bullish. So we're looking for the trades on Friday and Monday, basically. That's what we're looking for. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.